This week, we take a look at why Charlie Munger, the American billionaire investor and vice chairman of Berkshire Hathaway, bought a whopping 37 million of Alibaba stock. Alibaba, according to the Daily Journal Corporation, is China's largest e-commerce company in the first quarter of 2021. In his words, China's growing economic record is what interests this huge investor the most. Speaking of China, Charlie Munger says China's economic record among the big nations is the best that ever existed in the history of the world, and that is very interesting. Charlie Munger, one of the world's most successful investors and Warren Buffett business partner, bought 37 million of Alibaba stock, China's largest e-commerce company, through the Daily Journal Corporation and the first quarter of 2021. This was Munger's first significant change to the company's $200 million stock portfolio in over 6 years. With only 6 stock in the portfolio, this represents a major investment for Munger. In this video, we'll analyze and explain why Charlie Munger bought shares of Alibaba using 3 of his investment principles as detailed in his book, Poor Charlie's Almanac.
Well, I think that the Chinese government will allow businesses to flourish. It was one of the most remarkable things that ever happened in the history of the world when a bunch of committed communists just looked at the prosperity of places like Singapore and said, the hell with this, we're not going to stay here in poverty. We're going to copy what works. And they changed communism. They just accepted Adam Smith and added it to their communism. And said, now we have communism with Chinese characteristics, which is China with a free market with a bunch of billionaires and so forth. And they made that shift. They deserve a lot of credit. Warren and I are not quite as good at that as changing our minds in many cases.
Yeah.
And that was a remarkable change coming from such a place. And of course, it's worked like gangbusters. It had this enormous growth in the average income of the average Chinese. They've lifted 800 million people out of poverty fast. And there was never anything like it in the history of the world. So my hat is off to the Chinese. And I think they will continue to allow people to make money. They've learned it works. The Chinese, I loved what the guy said in the first place. I don't care whether the cat is black and white as long as it catches mice. That's my kind of talk.
The first principle that Munger follows is, number 1, make sure to assess the risk of an investment. This means avoiding permanent loss before analyzing the potential return of an investment. When it comes to Alibaba, there's one risk that stands out in particular. The fact that Alibaba is based in China, which has a different regulatory and legal system than the U.S. This was seen in November 2020 when regulators halted the $300 billion planned IPO of Alibaba's financial technology business, and following up with a $2.8 billion fine for anti-competitive practices. Due to these 2 major regulatory events, Alibaba's stock declined over 30%, or $530 billion in market value. Additionally, when investors buy Alibaba stock in the New York Stock Exchange under the ticker symbol BABA, they're not actually investing in Alibaba, but instead investing in a complex business structure called a variable interest entity, or VIE. A VIE is built upon a series of contacts between an offshore company and an onshore operating company. This means, in Alibaba's case, shareholders don't actually have any ownership of Alibaba itself, which can lead to limited shareholder rights. This, along with increasing accounting concerns for international companies, presents additional risk for investors. These risks are not to be overlooked. Large numbers of investment funds are selling their positions in Alibaba due to fear, uncertainty, and doubt. The different regulatory rules in the VIE structure and potential accounting concerns could all potentially lead to a permanent loss when investing. Despite these risks, it would appear that Munger believes that the potential reward to risk is high enough to justify an investment in the company. This brings us to Munger's second principle. Number 2, analytic rigor. While this translates to an extensive investment research process, Munger emphasizes that it's better to remember the obvious than to focus too much on specific details. If this principle is applied to Alibaba, the investment thesis is pretty clear. Investing in Alibaba is a bet on one of the largest secular trends of all time, the rise of China's middle class. With hundreds of millions of people increasing their income over time, this leads to higher purchasing power, which leads to higher retail spending. This directly benefits Alibaba, who has the largest market share in China's online retail market. That being said, this is dependent on China's economic growth as a whole. China has a track record of high economic growth and is expected to continue rising in the coming years despite its scale. And Munger has expressed this view on China through interviews and annual meetings. Munger is quoted as saying, "I think the Chinese will behave very shrewdly in managing their economy. They've gotten better results than we have in managing our economy, and I think that will probably continue." Knowing this, Munger doesn't just talk about China. He has in fact invested in the country before. For example, Munger bought a significant ownership stake in BYD, China's largest electric vehicle company, through both the Daily Journal Corporation and Berkshire Hathaway. Since Berkshire Hathaway's purchase in 2008, BYD stock has increased over 10 times, making it one of Munger's most successful international investments. In addition, when analyzing a potential investment, Munger states to focus on the business itself and not overanalyze the stock market and the company's stock. When we analyze Alibaba's business, the company has numerous growth opportunities and competitive advantages. In terms of growth opportunities, and in addition to Alibaba's Chinese retail business, Alibaba continues to expand internationally. It has a number of strategic investments in South Asia and Southeast Asia especially, and continues to enter new regions. Alibaba's cloud is the other major business to focus on. Alibaba's cloud is the leading cloud computing provider in China with an estimated 40% market share. But it is also one of the leading cloud providers in the world alongside Amazon's AWS and Microsoft's Azure. With cloud spending significantly lower in China compared to the US and China's increasing digitalization, this serves as a major runway for Alibaba Cloud. Financial technology represents another growth opportunity for Alibaba through their 33% ownership and stake in Ant Group, one of the largest payment companies in China. However, Ant is expected to face major challenges due to increased regulation, specifically regarding their leading business, which was one of Ant's most profitable segments. That said, with large total addressable markets for both Alibaba retail and cloud businesses, Alibaba still has major growth opportunities even with the financial technology business held back. Aside from retail, cloud, and fintech, Alibaba has a wide variety of growth opportunities in areas including smart logistics, online pharmaceuticals, consumer services, artificial intelligence initiatives, and other businesses as well. Munger also focuses on the competitive advantages or economic moats of the businesses that he invests in. Alibaba's advantages primarily fall into two categories. Number one, intangible assets, and number two, network effects. The major intangible assets include patents, employee talents, regulatory barriers, and data. Meanwhile, Alibaba's market benefits from classic network effects in which Alibaba's platform becomes more valuable for each buyer and seller that joins. These advantages support Alibaba when it comes to competing against major competitors, including Tencent, JD.com, Pinduoduo, and rising competitors such as ByteDance. While competitors have been taking market share from Alibaba over the years, what's important to emphasize is that in e-commerce industry, it's not zero-sum. With the continuous growth of the overall e-commerce market, this creates room for multiple winners in the industry. In addition to the business itself, Munger makes sure to analyze the management team before investing. This is important for long-term success of the business when it comes to Alibaba's management. Despite the popularity of Alibaba co-founder Jack Ma, Ma stepped down from Alibaba's board in 2019 and no longer serves an executive role in the company. The key members of the management team include Daniel Zhang, the CEO of Alibaba, and Maggie Wu, the CFO of Alibaba, who both have extensive finance work and educational experience. Zhang joined Alibaba in 2007, starting out as the CFO of Alibaba's Taobao marketplace, rising to Alibaba's COO, Chief Operating Officer, in 2013, and became the CEO of Alibaba in 2015. Meanwhile, Wu started out as the CFO of Alibaba.com and eventually became the CFO of Alibaba in 2013. She's the head of Alibaba's strategic investments. When it comes to assessing management, one of Munger's highest priorities is to assess the integrity of management. This is extremely hard to analyze from an outside perspective, but it's likely that Munger had a chance to learn about Alibaba's management directly or indirectly through one of the connections such as Li Lu, who Munger describes as China's Warren Buffett. Li Lu manages a portion of Munger's wealth through Himalaya Capital, a multi-billion-dollar investment firm that invests in US and Asia. Li Lu has invested in Alibaba before, buying 34 million of Alibaba stock in the first quarter of 2020. So it's a possibility that Munger discusses Alibaba with Li Lu before investing. This implies Munger investment in Alibaba signals that Munger trusts the management team, although it's interesting and surprising that Li Lu dissolved his share in Alibaba after his initial investment from the firm Himalaya Capital Management. The third and final investment principle that Munger uses for his Alibaba investment is number 3, allocation, specifically capital allocation. As an investor, the best use of one's capital is always measured by the next best used or opportunity cost. This means that based on the investment decision, Munger believes that Alibaba provides a superior investment opportunity compared to other major technology companies such as Facebook, Amazon, Google, and Microsoft. In addition to opportunity cost, Munger emphasizes that good investment ideas are rare, and when the odds are greatly in your favor, bet heavily. Based on the portfolio of the Daily Journal Corporation, we can see that Munger has a concentrated stock portfolio. The portfolio only has 6 stocks, which includes Bank of America, Wells Fargo, US Bancorp, PepsiCo, BYD, which is listed overseas, and now Alibaba, which represents one of the portfolio's largest positions. While Munger is extremely patient with his investments, sometimes waiting years before buying a stock, he isn't afraid to bet big when he finds a major investment opportunity. Following the stock market crash of 2008, Munger bought stock in major financial companies which traded at a substantial discount due to the market sell-off. Following the financial crash, Munger's investments in these financial companies, including Bank of America and Wells Fargo, have increased significantly in value. After waiting over 6 years, Munger has made a major investment again, this time in Alibaba, following the 30% decline in the stock after the company's regulatory uncertainty. Munger is taking advantage of the investors' fears regarding Alibaba, allocating an estimated 10 to 19% of Daily Journal Corporation's portfolio to the company, at a cost basis between $225 and $270 per share.
Well, it's natural for people to think their own civilization and their own nation is better than everybody else. But everybody can't be better than everybody else. You're right, China's economic record among the big nations is the best that ever existed in the history of the world. And that's very interesting. A lot of people assume that since England led the Industrial Revolution and had free speech early, that free speech is required to have a booming economy as prescribed by Adam Smith. But the Chinese have proved you don't need free speech to have a wonderful economy. They just copied Adam Smith and left out the free speech, and it worked fine for them. As a matter of fact, it's not clear to me that China would have done better if they'd copied every aspect of English civilization. I think they would have come out worse because their position was so dire and the poverty was so extreme. They needed very extreme methods, totalitarian methods, if you will, to get out of the fix they were in. So I think what China has done was probably right for China, and that we shouldn't be so pompous as to be telling the Chinese they ought to behave like us because we like ourselves and our system. It's entirely possible that our system is right for us and their system is right for them.
Gavin Smith from Berkshire, England, he asked, Mr. Munger is a champion of Chinese stocks. How concerned is he about Chinese government interference as seen recently with Ant Financial, Alibaba, and Mr. Jack Ma? What, for example, is to stop the Chinese government from simply deciding one day to nationalize BYD?
Well, I consider that very unlikely. And I think Jack Ma was very arrogant to be telling the Chinese government how dumb they were and how stupid their policies were and so forth. Considering their system, that is not what he should have been doing. And no, I don't think that. I think the Chinese have behaved very, very shrewdly in managing their economy, and they've gotten better results than we have in managing our economy. And I think that will probably continue. And sure, we all love the kind of civilization we have. I'm not saying I want to live in China. I prefer the United States. But I do admire what the Chinese have done. How can you not do it? Nobody else has ever taken a big country out of poverty so fast and so long. And what I see in China now just staggers me. There are factories in China that are just absolutely full of robots and are working beautifully. They're no longer using peasant girls to beat the brains out of our little shoe companies in America. They are joining the modern world very rapidly, and they're getting very skillful at operating.
Since Munger focuses on the long-term fundamentals of businesses that he invests in, he focuses less on what the stock may do in the coming weeks, months, or even years. Instead, as seen through both the Daily Journal Corporation and Berkshire Hathaway, Munger prefers to hold his investments for multi-year or even multi-decade-long time periods as long as the business quality remains high. He says, my Berkshire Hathaway stock cost me $16 a share and is now selling for almost $300,000 a share. That's been a very good investment. It took a long time and it was a long-term investment. Well, I liked the people I was investing with and I like the companies that I was investing in, and I just sat there for more than 50 years, and lo and behold, it worked out very well. Now, could Munger potentially be wrong with Alibaba? Are you concerned about the number of sanctions against Alibaba by the Chinese government? Munger has signaled that Alibaba could potentially present an attractive long-term investment opportunity. What are your thoughts? Is Alibaba a good purchase for the long term? Let me know in the comments below. I hope that you enjoyed this week's investing philosophy from Charlie Munger on Alibaba. Please like and subscribe to my videos so that I can continue to make videos like this that you will enjoy.